The Qtec daily cloud chart shows the combo and sequential cell countdown 12 printing, so it's one number away from printing the 13s. And if that does happen, and there's still no downdraft, there's always the combo and sequential clusters. So the combo cluster on cell countdown 7, sequential cluster cell countdown 4, they could travel upwards to get 13s to print there too. And this once qualified demand line was qualified canceled with a vengeance, so closed well above it and kept moving up. And this ongoing supply line for Qtec is at 164.03. So just by eyeballing the buying pressure from this bar, the low to the close, it looks like it will need to gap up and then close above it without coming back down to fill the gap, or just straight up gap up above it and close above it 164.03. Then it will become qualified if it does either one of those. And it looks like the open reverse break would make it below the mid band of the Bollinger Band. It would have to tick lower than that. Of course, open lower, tick lower, and then turn around and get above that ongoing supply line. It could become qualified that way, and it did that one time a few days ago. Somewhere over here, it qualified that demand line that was canceled, I believe. And the cloud baseline and lower Bollinger Band are racing up to become support, hopefully somewhere around here. Maybe it can join the Stark Band, lower band, and the channel 3 low. And the Qtec daily chart could qualify this trend factor down 1 and momentum down for 50% on 100% propulsion with closes below either one or both of them. And I spoke too soon. It was not inevitable that the fast QQE was going to make it under the slow QQE. It just kind of skimmed right on it and is still staying above it a little bit. And the same thing for the pressure down here. The P alert disappeared as it went back above either this down 1 or it's based on a percentage somewhere near that, so went back above that, and then that disappeared. There's still the long-term overbought up here, and the slow trigger down is skating right along the overbought line, so it's flattened out up there, and the fast trigger up is trying to make a move to get above oversold 25. And here's the full wave for D wave, A, B, C, 1, 2, 3, 4, 5, printed on the 8th with a tick higher than this high. So there was a high 4609.23. That was pretty close, but nonetheless printed the D wave up wave 5. So that puts the D wave up on D wave up wave A, and that will print on a tick lower than this low, 4537.24 for tomorrow. And the D wave down is on D wave down wave B, and same thing, tick lower than this low, and that will print, it will be the AB. So the D wave up wave A from this 5 print here will more than likely print on a shallow pullback. That doesn't mean it can't just keep going. The A can go on indefinitely with no shifting. I don't expect that. And then if it turns around and heads up and gets higher than this high, 4609.23, then the 5 will shift over and the B might not even print. If there's a deep pullback and the A goes down here and it struggles to get up and prints the B still has a chance to get above this high. And if it doesn't and heads down and prints the C, then I say we can forget S&P 5,000 for the end of the year. And the D wave for Qtec is on the D wave down wave 1 and the D wave up wave 2. And that's similar to the S&P 500 where the D wave up wave 2 is on the same count as the D wave down wave B in the S&P 500, and this D wave down wave 1 is on the same count as the D wave up wave A in the S&P 500. So a tick lower tomorrow than this low, and we'll get that, the D wave down wave 1 and the D wave up wave 2 over here. Same thing as S&P 500 except opposite from down and up. And here's the most volatile ETF in existence just about that you can get involved in and be extremely frustrated or extremely happy that you got into it. The IWN value ETF, and you can see DM1 is sailing away above the overbought line. Same thing with ROC, had a little bit of a scare for going under and just bounced right off of it, so that's in good shape. And the REI is either making a move to neutral zero, and if it passes through it, we're going to wait for the buy signal 5 days or less under the oversold, while DM1 and ROC are sailing away up here hopefully, and then get back above this oversold negative 40 for REI in that same time frame that it spends under here, 5 days or less, needs to get back up above it. And it did print the REI low risk down arrow. That's really only good for 1 or 2 days. So it's been a couple of days, but you never know. This is a really wild card of an ETF here. And besides all of this going for it down here in the marker 1 ROC and REI, it is well above the conversion line, which is well above the baseline, and the 35 simple moving average in red had the crossover above the 50 simple moving average in gold. So we got the fledgling rainbow pattern going on here to the upside, so that's a good sign there. And the 20 is still well above the 35, so that spacing is everything. Here you can see the spacing to the downside of this ETF. You can see the 20, the 35, and then the 50 are evenly spaced. So that's definitely a strong downtrend there, and the same thing needs to happen here. Evenly spaced going back the other way up. And the other thing going forward is that the buy TDST is sitting right on top of the cloud here. They're pretty much right together, and they're both below the baseline, so it could have a pretty good downdraft, but good support here, let alone the 20. But if it gets under the 20, it could bend the 20 downwards, and we get a cross under the 35. That would be a really bad sign, as it would probably just go right under the 52. And having the DMI plus above the DMI minus for this long middle of November, so just about a full month. But it still looks like it's really strong. The negative or minus is pointed down a little and the plus is pointed up, but it doesn't take much to change that on impulsive moves to the downside.